Can I assume somebody else's loan? Many people who are selling homes have interest rates that they obtained 2 or 3 years ago or longer, and the rates are really, really low compared to what we can have now. That's a very attractive idea, a prospect of buying a house, and instead of getting today's 7% interest rates or 7.5% interest rates, you get their 3% interest rate. So who wouldn't want to do that? But the short answer is, can you do that? Occasionally. But it's going to be really kind of that rare circumstance that everything kind of comes together that makes that work. So first of all, you can typically only assume government loans, FHA, VA, USDA. USDA is a very kind of small segment of the marketplace. FHA and VA are more popular, more common that you'll encounter out there. But conventional loans are not assumable. So the vast majority of people have Fannie Freddie conventional loans, and they're just not going to be assumable. That's not a part of the contract that the current borrower has with the lender. Whereas in FHA and VA, typically those are assumable technically. What situations is that going to work? Well, first thing you have to be aware of is that you may need quite a large down payment if you're going to assume somebody else's loan. Let's say they bought the house 20 years ago, let's just say 10 years ago. They bought the house 10 years ago, and it was a $400,000 house, and now it's worth $900,000. And they borrowed $300,000 on it 10 years ago, and now they owe $200,000 on it, and it's a $900,000 house. Well, even if that loan's assumable, it's only a $200,000 loan. You can only assume the existing balance that they have. And so, sure, if you got $700,000 to put down on that property, maybe that's going to work. But that kind of illustrates one of the biggest hurdles you're going to run into on an assumption type scenario is you would either need to have yourself a very large down payment, or you need to find a property where the balance outstanding is closer to the current value of the property. And usually that's going to be someone who acquired the property more recently, that then is going to turn around and sell that and perhaps let you assume that. The other hurdle you're going to have to be aware of on an FHA and a VA assumption is these servicers who you're going to have to work with in order to do an assumption, whoever they're making their current mortgage to for that FHA or VA loan, they're not necessarily good at processing assumptions. This isn't a moneymaker for them, and it's not something that really they do a lot of. Even if it were a moneymaker, there's just not that much of this activity that goes on. So they're not going to have vast departments with efficient processes for dealing with this. So you're generally going to have to build in a much longer period of time. And I've really heard horror stories of like 6-month time frames. And so maybe an FHA or VA, maybe a VA assumption works, where it's a child who's, who can be patient, and the buyer and the seller have plenty of time to kind of work the deal out. Now, the average is probably much lower than that, and so I'm not necessarily trying to scare you, saying you should never attempt it. You definitely should. If you have a situation that looks like it might work and it could save you money, definitely approach that question. And you probably start by reaching out to the servicer and just see what their process is and what the expected turn times are. And then the seller has to accept that as well, of course. They have to be willing to sell to you if you're going to go through that assumption process, because you're invariably going to take longer than a buyer who comes along and doesn't need to assume that loan. But those are some practical considerations. Now, additional things to consider: mortgage insurance, for example. On an FHA loan, FHA loans have mortgage insurance, and generally that mortgage insurance is permanent unless you have a really old mortgage insurance FHA loan that was taken out before the mortgage insurance premiums were generally made permanent. So you're probably going to have a mortgage insurance premium for the life of that loan. Now, again, in today's interest rate environment, if you have an FHA mortgage at 2.875%, and you have another 0.8% mortgage insurance premium, you're still sitting at 3.6, 3.7%, so it's still a steal. It's a great deal, but just be aware of that. Just don't be surprised by that. VA doesn't have a monthly mortgage insurance premium, so that's not a factor. Funding fee. FHA, no, you don't pay an additional funding fee when you assume an FHA loan. In VA, you do. It's a smaller funding fee than the vet typically has to pay in order to get that VA loan in the first place. It's a 0.5%. So if the loan amount, let's say, is $400,000, 1% of that would be $4,000, so a 0.5% would be $2,000, and those are your costs. Now, typically on an assumption, your overall costs are going to be lower than they would be if you were just taking out a brand new loan. I wouldn't think of this as being many, many thousands of dollars lower, because you're still going to have escrow, you're still going to have title, you're still going to have certain things that are going to happen that are going to get paid for. So just be aware of that. But yes, there is a funding fee that you pay with the VA loan, and that's to support the VA program to keep it going. Lender fees, both FHA and VA have max lender fees that a lender may charge in order to process that. FHA is $900, VA is $300, but remember that's $300 plus that 0.5%, and then plus those third-party costs that are necessary for the process, title and escrow, we mentioned that. Liability release, automatically on the FHA, yes. With a VA, it's not automatic. You kind of have to proactively take the step for the seller to have liability release. And of course, that's going to be something that's very important to them, is, they don't want you to assume their loan and then they're not free or released from liability in the event that you don't make your payments and that house gets foreclosed upon and they come after you for payments. Of course, the seller wouldn't want to enter into that situation. And then almost important for the VA seller is entitlement restoration. And this is kind of the bigger deal sometimes for the VA seller, is you don't have to be a veteran to assume a VA loan. You can assume a VA loan and not be a veteran. However, if you're not a veteran, then that entitlement that veteran has is stuck with your loan. The way VA works is you have an entitlement amount, and that entitlement amount gets eroded as you use it, but it gets restored when you repay that loan. And so that VA entitlement can be used over and over and over again. And sometimes on multiple properties. That gets into real technicalities that we won't go into here. But if a veteran lets a non-veteran assume their loan, then there's no way to reclaim that entitlement until much further down the road when you sell and pay off that loan and that loan gets repaid. Or if you happen to go into, if they leave their entitlement with that loan and then you go into foreclosure, that can be something that permanently impacts their ability to then subsequently borrow on the VA. And so just be aware of that. It may not be a big deal if you have a veteran that is an older veteran that's not looking to buy their next house. Maybe they're going into retirement living or that kind of a thing, a retirement home. It may not be that big of a deal, but for many veterans that's going to be an issue. And even if you are a veteran, assuming from a veteran, you still have to go through that process of substituting your entitlement for their entitlement. So that's a process just be aware of. Bottom line is, can you purchase a loan with an assumption? Yes, it's possible and it happens. But just be aware that there are a lot of practicalities. So make sure you kind of address all those things up front before you get too excited about that. And give me a call if I can answer any questions. If you like this video, subscribe to us, please. Like it, give me a review, any comments that you have, love all of that stuff. Thanks so much.